Maverick traders, welcome out to your market roundup. It is April 15th, 2024. Corey here with you. As always, we're going to take a look at meaningful news in the markets, what sectors are hot, what's not, and we're going to highlight bull and bear and sideways trades. And we've got some of all of the above for you today. But of course, it was a very bearish day.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So for today, it was all red. Of course, Dow, S&P, NASDAQ, Russell. NASDAQ got hit particularly hard, almost down 2%, but S&P and Russell down almost 1.5%. Oil flat and gold back up, but gold had a nasty sell-off on Friday, so it was kind of a little bit of a big sell-off and then an inside day. Tomorrow will be important for the precious metal markets, where it was just sort of, this could just be a little bit of a reprieve, an inside day from Friday's reversal, and then we'll see. On the daily news, market sell-off continues. The markets are paying close attention to Israel and Iran and the attacks and the potential for another war to break out. That speaks to maybe why the commodity space is a little bit stronger. Advanced decline line down 80% of all stocks lower, and the 50-period moving average now bearish, right? 3/4 of stocks are now in downward trends. So as we come in and look at the S&P chart, interesting that we've been in correction mode for about a month now. We've been gravitating lower, and this tends to be how things work. We talked about this pivot low, that we hadn't taken out a pivot low in months and months and months, and then it happened back here. Notice that since that time, every time you try to gap up or rally, it sells off. You have an up day, it sells off the next day. You gapped up this morning, it sells off again. So the markets are heavy. Supply, it's all a supply and demand dynamic, right? Supply is coming into the markets. Market participants want to sell stocks. They want to unload. They want to get lighter in the equity markets. And for now, we've broken the 50-period moving average. Now, because this has been such a strong bull market, the buyers don't go away that quickly. If you want the sell-off to really intensify and see multiple red candles, you're in the wrong location for that in all likelihood. Most of the time, what happens here is this becomes a battleground, a tug of war ensues. If you want the nasty sell-off, that usually happens when the bearish trend has a much stronger grasp. And so if you want the strong red candles that happen day after day after day, that would happen much, much lower in price. And that seems counterintuitive. People would think, well, when the sell-off's first starting, that's where things should get ugly. No, people are still debating. Look, the 20's just starting to turn over. The 50 still has an upward slope. It's not like we've been in a nasty bear market. It's not like the average person out there that holds stocks are panicking or even in, really aware that the markets are selling off. They're not really aware of that. I actually spent this weekend, I went to Augusta. I went to the Masters. Let me tell you, people are paying attention to golf. They're spending money. They're probably not as on top of the markets as you or I are. So why does the sell-off, when you see big, huge red candles that just are relentless, why does that tend to happen after the bear market has been, after the downtrend has been going for a while? Because this nasty type of selling has to occur from things like forced liquidations and the public becoming aware and panicking and so on. And we're not at that state right here. This is still a battleground area. So I would be cautious about those that think, oh, we're just going to violently sell off from here. In order for that to happen, you'd have to have the markets really, really spooked by the Israel-Iran situation. You'd have to have something bigger, something more impactful. Most of the time, what happens is some choppiness in here, not the dramatic decline that just goes day after day for a while. I don't think that occurs. That should happen down here, probably a few months from now, after some sideways, and then the sell-off continues and so on. Maybe not months, but at least weeks from now, when you'd get forced liquidations and margin selling and all those things. That comes later. That's not here. So just as markets tend to have a little bit of a parabolic curve sometimes to the upside, where the initial trend is very reasonable and then it gets unsustainable, right? And you go vertical. The same thing is essentially true in the sell-off. You're starting to sell off, but this sell-off should have peaks and valleys and be more reasonable for now. The indiscriminate selling comes later. Look at the NASDAQ. Again, I mean, you could argue that we've been in a basing pattern for a while. Now, if you've been following these market roundups, that I turned cautious weeks ago. I kind of said, look, for me, I'm just not a mega bull anymore. I have some discretion in my grading system, and I said, okay, I'm going to overrule some of these trend following things. And I didn't do that back in here, by the way. I was very bullish, like pretty much everyone in the markets back in here. And I shouldn't say that, because most people were negative, I guess. Most people were doubting the markets going up. But us trend followers, we were all bullish there. But I turned cautious some weeks ago, and I would call it going more towards neutral. Now, I've started to skew that a little bit more bearishly recently, but I'm still not fully on. I'm not up -3 or something like that. No way, no how. This is, again, still going to be more of the tug of war, and then maybe a little more selling and more of the tug of war. And by the way, it wouldn't even be shocking if a day like today were to set the low and we could go to new highs. That's how a tug of war works, is you get a tug of war and then somebody wins, and one group takes control, and we don't truly know who's taken control just yet. I mean, it's easy to say, okay, in the short term, the bears have control. I'd agree. In the short term, we're making lower highs, we're making lower lows, but we're still battling it out. So a lot of red, of course. NASDAQ, we know, almost down 2%. Of course, there's just bright red in anything tech related. A couple of little pockets of strength, the capital markets within the financial sector, healthcare. Now, Morgan Stanley reports earnings later this week, but Goldman kind of lifted that group. Now, as we look at the market outlook, again, I think we're moving more towards neutral. I'm just not that mega bear. So ideas, well, commodities are still the stronger area. So I've got a gold play, I've got an oil play, a little bit more sideways on something like a Home Depot, and then some bearish ideas. So let's look at a couple of these charts. ConocoPhillips trending a little bit down since Friday's ugly reversal, right? And it could do that a little bit further. But put in context, man, this is a great looking chart. Upward slope, has been essentially high basing up here, and I don't think that this is really anything that makes me think that this stock is going to go down in any significant fashion. I'd still call it basing up here. So I still think we're within a sideways range, and my guess is that it's going to chop around here for another week or so, and then quite probably still leave on the upward side. If we want something that's just pure neutral, I could see Home Depot. I don't think there's a ton of upside. You've already broken down some weeks ago, but that's kind of what I'm looking for. Is this is something that had already broken down, had already led the markets lower. Now we had big move on the downside. This could be a little bit of an exhaustive type of signal, and you get some choppiness in here. So if you're looking for more of a sideways type of trade, Home Depot, I think, will just gravitate around this 340 price level. Now, when I say gravitate around, it's going to bounce up, but then it should come back. It's going to sell off, and then it should bounce back up. I think we'll fast forward a couple of weeks and we'll look back, and Home Depot still kind of just bouncing around and keeps crisscrossing that 340 mark. On the bearish side, Monster, this one also broke down previously, but had some levels of support in here. A little bit of a attempt to recover above it, and today gave up ground again. And here, I think, is a name that should continue to sell off. It's a little different than Home Depot in the style of business, growth versus more of a value type of name with Home Depot. Very different sectors, trade on different indexes, right? If we look at it that way. But Monster Beverage, I think, can continue to sell off a bit further here, where I would play some of the other names that are selling off. Not a lot of them, but some of those, the Berkshire Hathaways, the Home Depots, I'm going to call them the big mega cap names. That's where, and the value names, not so much in tech, not the Googles and Apples, but, the Home Depots, the Berkshire Hathaways, the Boeings, some of those names look to me like those are going to go sideways for a time. That's my take on the market. So markets are in that full correction mode. Fed Chair Powell speaks tomorrow. Markets are planning for fewer rate cuts to happen this year than was originally planned. That was always Maverick's viewpoint from the start. We've got a lot of earnings coming out for the next few weeks. Abbott Labs, Bank of America, Johnson & Johnson, Morgan Stanley, Netflix, Taiwan Semi, United Health, and more. Hope you enjoyed the market roundup. Have a great week, everyone. We'll see you next time.